Hi everybody, this is Bob Iacchino along with Mike Arnold from Path Trading Partners with another Path Chat. We're going to do just a quick FX update. A lot going on in this coming week. First of all, you can't look at the markets these days without mentioning things going on with the new president of the United States. President Trump issued an executive order. Essentially was a travel and immigration ban. It's very specific, so we're not going to go into that. But given all the protests we saw and all of the reaction we saw to it, it has more of a protectionist bent, is the way that we think the market's going to look at it. So you could see some volatility that may not have been expected right off the bat. But then going forward, you've also got the FOMC rate decision, Bank of England, Bank of Japan, and then non-farm payrolls. We've also got Mexico's GDP, but I'm not sure that's going to be a big deal. We've got Japanese retail sales. So there's a bunch of stuff coming out this week on top of the market's reaction to the protests and the upheaval we saw from this travel ban. So let me just go ahead and give it over to Mike so he can tell you what's going on in the charts, and pay close attention to the levels and the patterns here, because these things could move pretty quickly starting tomorrow.
Okay, thanks, Bob. So here we have a euro chart. Let's just start with that. Let's just take a quick macro look on the weekly perspective. We are still in declining R zone. It's now going flat, so it's losing its weight. But between these two moving averages and these two magenta levels are very key. So if we get out of those, we could see some movement higher or lower, but those are the two key levels I'm going to be watching. Let's zoom in on the daily. On the daily, again, the magenta levels are key. We've seen how much resistance this 107.58 level has been, really 107.60. Every time it's popped up above there, it's stayed up there for a little bit of time, then been rejected off that level. That is a key line in the sand. If starting Monday we rally higher from where we are now, watch for resistance at this 107.60 level, 107.58 level right around in here, and this declining trend line. We have a very key line in the sand, which is what we call the defining point, which is officially, we're going to call it 107.59. If we get a daily close above that, watch for it to target higher levels. Some of the key higher levels are the 107.96, so really the 108 level, and then above there, the 108.70 level. Those are key. On the downside, if we head lower, we do have support from this rising exponential moving average around the 106.50 level, and we have a significant level and target around 106.41. If we break down there, there's lots of support in here, which you can see. Some of the key other areas that you can look to target are the 106.02 level. So really the 106 level. That's what we're looking at on the euro. On the pound, we've talked about last week this trend line trade, which went up and hit our key levels. We've now pulled back to retest this rising trend line, this upper trend line. You see how it was actually from this low to this low. It's the way we draw our trend lines, and it provided support. If we rally, then watch for a sustained move above the opening price on Friday, which was 125.95. So that's going to be your first area of key resistance. And then above that, watch for it to target the 126.34 level, and then above that, the 126.76 level, again, where major resistance. If we go lower, especially below the low on Friday, which was 125.16, watch for potential support around the 124.90, which is the rising moving average and this target line. And then if we break below that, you're going to get support of a retest of this trend line we broke out of, and then the 124.18 level. And finally, if we continue lower, we have lots of support around the 123.87 level, which also comes in around this rising exponential moving average. So those are your key levels to the downside. Take a look at the yen also. We've talked repeatedly about this potential double bottom on the weekly chart. We've now above the rotation zone again. For this to become a actual double bottom, it has to trade above 115.62. For it to trigger on our basis, it has to close above 115.62, and then that will provide many opportunities to trade in the direction of this longer term double. So you can take trades on intraday bases in the direction of that, especially on pullbacks to key levels. Let's just take a look out on the weekly chart. You can see here that we are still in a rising rotation zone. So this is going to provide key support if we do go lower. So if we do go lower, watch for a retest of the 113.86 levels going to be my next target down, and then the 114.09 level. So those are the key levels that I will be watching on the yen. Back to you, Bob.
Thanks, Mike. We also have the dollar Swiss on this chart, and part of the reason is because of the activity we saw over the weekend in terms of protests based off of Donald Trump's travel ban and immigration restrictions. So dollar Swiss is a flight to safety pair in the FX. So is dollar yen. And if anything's going to happen in here, we would see the dollar collapse a little bit. So there's your level. There's a little horizontal channel right there that you can look at in the dollar Swiss, 99.70 on the downside, and then 100.10.5 on the upside. Thanks, guys, and we will talk to you in the next Path Chat. Cheers, everybody.